Welcome to Explain It. Today, we're diving into a massive trade deal that could completely change the price tag on your dream car. After nearly 2 decades of back and forth, the India-EU Free Trade Agreement is finally happening, and it's a big one.
Okay, let's just jump right in with the one number that tells the whole story. 110%. For years, that's been the huge customs duty slapped on many premium cars coming into India from Europe.
Think of it as a giant tax wall. A customs duty, or a tariff, is basically a tax on stuff you import, and it's usually there to protect local companies. But in this case, the wall was so high it pretty much doubled the price of a car before you even saw it in the showroom. But now, a historic trade deal is about to take a sledgehammer to that wall.
So what is this game changer? Well, this isn't just any old trade agreement. India's Prime Minister Narendra Modi has actually called it the mother of all deals. And when you look at the auto industry, you can see why. The impact could be absolutely massive.
This is the India-EU Free Trade Agreement, or FTA for short. And let me tell you, it's been a roller coaster. Talks started way back in 2007. Then they stalled, but now they finally crossed the finish line. We're talking about a deal that connects two economic giants that, together, make up a quarter of the entire world's GDP. All right, let's break down what's really changing here. The big headline is that import tariff on fully built cars is absolutely plummeting, from that staggering 110% all the way down to just 10%. Now, there are a couple of catches. This super low rate only applies to a set number of cars, a quota of 250,000 vehicles a year, and it's only for cars that are priced above 25 lakh rupees.
Okay, so percentages and quotas are one thing, but what does this actually mean for you, for the car buyer? Let's forget the abstract stuff and talk about the real-world impact on your wallet. Let's actually run the numbers. So for our example, let's use an imported BMW 3 Series. Let's say its base price, before any Indian taxes are added, is 50 lakh rupees. We're going to calculate its final price in India, both with the old rules and with this new free trade agreement.
And here it is. This is where you see just how huge this deal is. Before the FTA, the customs duty alone was 55 lakh, more than the price of the car itself. That pushed the final cost to over 1 crore. Now, that duty is just 5 lakh. The final price comes down to 55 lakh rupees. That's a price cut of almost 50%. Incredible.
Now, this price drop doesn't just happen in a bubble. It completely changes the competitive landscape. All of a sudden, a premium European sedan is in the exact same price bracket as a top-end Toyota Fortuner. I mean, that's a comparison that was pretty much unimaginable before this deal.
But look, this deal is about way more than just cheaper prices on a few specific models. It's sending shockwaves, really, through the entire auto industry. And like any big change, it's creating a new set of winners and losers.
So, who comes out on top? Well, the most obvious winners are Indian consumers. You get more choice and much better pricing if you're shopping in that premium segment. And of course, the European giants, think Volkswagen, Mercedes-Benz, BMW, they now have much better access to India's enormous and fast-growing market. And on a bigger scale, it's a great signal for the Indian economy, one that can really boost global investor confidence.
But, on the other side of that coin, there's some real anxiety. Domestic manufacturers here in India are worried that a sudden flood of these super competitive European cars could overwhelm the market. They're concerned it could threaten local production and the jobs that have been protected by that high tariff wall for decades.
And this chart, this really puts those concerns into perspective. The Indian car market is dominated by players like Suzuki and our own Mahindra and Tata. European car makers, right now they have less than 4% of the market. You can see how a deal like this could completely upend the entire board.
So this brings us to the really big question. It's not just about the deal itself, but what happens next? Is this new competition going to be a major threat to the Indian auto industry? Or could it be the very thing that pushes it to evolve?
The strategic play for India is to turn this potential threat into a massive opportunity. The goal here is to use the deal to actually attract more European investment into India, forcing local companies to innovate and raise their game to global standards. The ultimate dream? To leverage European technology and investment to turn India itself into a major car export hub for the entire world.
So, in the end, this landmark agreement forces a really critical question. This isn't just about getting a better deal on a European car. It's a true turning point that could decide the future path for one of India's most vital industries. With the gates now open, will it rise to the challenge? Only time will tell.